The central bank today announced simultaneous sale and purchase of government securities worth 10,000 crore rupees each via open market operations. The RBI said that they will be purchasing bonds maturing in 2029, whilst simultaneously looking to sell 10,000 crore worth of short-term bonds maturing in 2020. The idea, of course, behind this move is to ensure that the yields flatten in the long term. How effective will be this move, and is this, one of the many measures that the RBI will take, or will we see more such measures? My colleague Soumya Sharma is joining in with more details. Soumya, what has the RBI done today, and more importantly, how effective is this going to be in flattening the yields? What could be the key risks too?
Well, Ruchi, first of all, giving a context to it, ever since the RBI's monetary policy meet in December, we did see rising bond yields, and in fact, Geeta Gopinath's recent comments on the fact that IMF is looking at a significant downgrade for India in the Jan review, along with FM's focus on growth, has actually put a lot of bond investors in concern of the government breaching the fiscal deficit target. Now, the RBI today has announced an unconventional step wherein they're planning a $2.8 billion operation twist to yields. With this, they'll be buying and selling close to about 100 billion bonds. And now what actually this means for the entire bond market, this will definitely help in reducing and narrowing the spreads between the long-term and the short-term yields. Not just this, they'll cheapen the long-term borrowing and will definitely spur some amount of bank lending. Now, ever since the RBI had done rate cuts, despite this, these benefits were not passed on to the economy. Now, we might see some amount of growth coming back. We might see animal spirits and demands coming back in the economy. In fact, economists say that we may see some amount of correction in the bond yields, but the liquidity will predominantly remain at the same level. Not just this, they add that this 10,000 crore is actually a small amount. Nevertheless, this is a really good signaling effect by the RBI. Now, this all definitely stands to be a positive for the entire economy, which was actually grappling with a lot of issues right now, and we may see some amount of correction in the bond yields tomorrow.